Riddle me this. With the current state of Nigeria, would you rather travel by road to another state because it's cheaper, or travel by air even if it's far more expensive? You'd most likely choose to fly, right? Because despite the higher price, it's safer. Instead, you can invest the same 100,000 in a fixed income investment. That guarantees financial security and still offers promising returns. Now, if you're like me who has enough painkillers at home, just joking. I mean, if you're like me and you enjoy a balanced level of risk, why not put that 100,000 in a balanced fund? So ask yourself, will you travel through the risky route just because it's cheaper, or take the safer route that helps you arrive securely? Riddle me this. With the current state of Nigeria, would you rather travel by road to another state because it's cheaper, or travel by air even if it's far more expensive? You'd most likely choose to fly, right? Because despite the higher price, it's safer. Instead, you can invest the same 100,000 in a fixed income investment. That guarantees financial security and still offers promising returns. Now, if you're like me who has enough painkillers at home, just joking. I mean, if you're like me and you enjoy a balanced level of risk, why not put that 100,000 in a balanced fund? So ask yourself, will you travel through the risky route just because it's cheaper, or take the safer route that helps you arrive securely?
Greetings, top of the morning, and a happy new month to you, our esteemed listeners and investors. I want to welcome you again to another edition of our Monday morning breakfast session. I am Akiyemi Omotayo, and joining me this morning is Mr. Joseph Semitula. Very quickly, I'll be taking you through the happenings in the fixed income market for last week and what we can expect for the following week. For our money market and treasury bills, interest rates are just following MPC decision to be the theme for last week, as we saw the open repo rates and the overnight rates conclude the week at 22.50% and 22.71% respectively. This follows the monetary policy's commitment with recent decision to adjust the asymmetric corridor around the monetary policy, coupled with the prevailing ample liquidity in the system. The adjustment in the corridor likely influenced market dynamics, while the ample liquidity provided a cushion, contributing to the current levels of the open repo rate and overnight rates. These factors collectively shaped the interest rate environment at the close of the week. Last week, the Treasury bill secondary market extended its bullish run, driven by renewed buying interest that was underpinned by robust system liquidity. As a result, the average yields across the curve declined by 11 basis points, closing the week at 16.84%. The sustained bullish momentum suggests that the market sentiment remains positive, with investors optimistic about prospects of the fixed income market. At the most recent Nigerian Treasury bills auction, the Central Bank of Nigeria offered 700 billion worth of the Nigerian Treasury bills with an oversubscription of 592.01 billion. This strong demand indicates investors' continued appetite for short-term government securities. Consequently, the CBN allotted a total of 1.09 trillion, exceeding the initial offer amount. In terms of pricing, we see stop rates close flat for the 91 days, the 182 days, and the 364 days bills, respectively. Taking a quick look at the bond market, the federal government of Nigeria bond secondary market concluded the week on a bearish note, driven by profit-taking activities amongst investors. This shift in sentiment reflects investors' response to prevailing market conditions. A breakdown of the tenor reveals a notable shift in yields, specifically the short end of the curve saw yields rise by an average of 24 basis points, indicating a significant increase in yields to shorter dated bonds. Meanwhile, the mid to long end of the curve also experienced an uptick, though at a more muted pace, with yields increasing at an average of 11 basis points. This upward movement in yields across the curve is a reflection of the bearish trend in the bond market, driven by profit-taking and shifts in investors' sentiments. Trading activities over the week were concentrated in specific bond maturities, with the 2027, the 2028, 2029, 2030, 2031, 2032, and 2042 bonds being amongst the most actively traded for the period. Average yields on the benchmark bonds saw a notable increase, rising by 16 basis points over the period. At the end of the week, average yields settled at 15.58%. This upward shift in yields still reflects the bearish tone in the bond market, obviously driven by investor sentiments and market dynamics. At the foreign exchange market, the Naira witnessed an increase in value as we saw a positive 0.68 change in the NAFEM window, closing the week at 1,448.05 kobo as compared to 1,459 Naira 97 kobo in the previous week. And as for the forwards, we see rates continue on a steady rise for the 1 month to 1 year forwards. Outlook for the week. This week is expected that funding rates are to continue on the upward trend, driven by anticipated liquidity inflows into the system, assuming no major outflows disrupt the flow. For the Treasury bill secondary market is anticipated to trade quietly this week, with market participants likely adopting a wait-and-see approach ahead of the upcoming primary market option, potentially leading to a muted trading activity for the week. And lastly, as the week unfolds, the bond market as well is expected to trade in line with system liquidity. Considering all these market dynamics, it is key for investors to take advantage of the market by taking position now in our numerous array of products, ranging from our lead fixed income fund. This fund provides investors a stable interest approach with biannual dividend payments, providing a regular income stream. However, it is crucial for potential investors to understand that the fund comes with a 90-day lockdown period, during which withdrawals are not permitted. The fund also comes with an 18.56% yield as of date. Given the current market conditions, we encourage investors to consider this fund as a viable option for generating stable returns while minimizing their risk. For investors who look to strike a balance between their risk and returns, our lead balance fund presents a compelling option. This fund is designed to diversify investments across two key assets, 50% being allocated to high-quality stocks and 50% invested in fixed income instruments. By combining equities and fixed income instruments, the fund helps investors spread risk, reducing dependence on single asset class. Notably, the least balanced fund is currently yielding at an attractive annualized yield of 44.27%, making it an opportunity worth considering for our lead investors. For investors seeking a low-risk option with fixed return, our Gazelle portfolio is an attractive solution for you to pick from. This portfolio allows investors to lock in at a predetermined rate for a specific period ranging from 90 to 365 days, providing a high degree of certainty around your returns. For investors seeking to protect their assets from the depreciating Naira, we recommend a Eurobond trading platform. This platform allows investors to invest directly in US dollar denominated debt instruments, earning your returns in same currency through biannual, that's twice a year, payments. Please note the minimum subscription to this platform is $200,000. For investors who cannot meet up to this threshold, we offer you our lead dollar fund, a viable alternative with a lower barrier to entry, which is $1,000. This fund has a 180-day holding period. It provides annual dividend payments and boasts of a low risk profile, offering an attractive yield of 9.23% as of date. That being said, allow me to hand you over to my colleague, Mr. Joseph Semitula, to give you an insight of the happenings in the equities market space and what we can expect to see this week. Mr. Semitula, over to you, please.
Thank you so much, Mr. Tayo, for that excellent presentation. Good morning, highly esteemed client. I'll be giving you insight on how to navigate the equity market for this week. Next slide, please. So we're reviewing the market, our brief analysis. So the all-share index has been experiencing a constant decline last week until on Friday, where we had a bit of the bull showing up after the bear has been exhausted. Next slide. So looking at the pie chart, we'll always see the financial services will continue to dominate the market and the likes of the insurance and the banking. And this is as a result of investors taking a position ahead of full year dividends and also ahead of the Santa Claus rally. And we also see the service sector at 4%, while the consumer goods also have 3%. You can see the likes of UAC and also attracting volume in that sector. And we also have others also which contributed 12%. So far, we had a total of 4.14 billion shares worth 115 billion, which was traded last week. And if we compare that with previous week, which was 2.67 billion share, which was worth 107.26 billion, this gives us insight that there's a lot of volume coming into the market. And the sectors that led this volume were the financial services, which led by 3.36 billion shares worth 18.18 billion. This contributed 81.10% and 70%. And if we quickly look at the top three equities also that actually brought this volume, we look at Cornerstone Insurance, we look at Access Holdings. These are the two major equities that accounted for 2.01 billion shares worth 47.54 billion. And if we look at the market capitalization, we had a slight depreciation by 0.14%, which is 143,320.53 basis points, which amounts to 91.29 naira in trillion. So if we look at the sectoral performance, we only have the NGS banking, which gained 0.67, which gives us insight on what I said previously, that the banking sector always get this renewed buying interest as investors are gradually taking position ahead of 2026. So if we look at the representation of the all-share index, you will see a very small indecisive candle, which gives us insight that there is a reversal that we're going to see this week. And while we take notice of the major resistance, which we look at volume coming in, we'll be able to break that major resistance and which we send. But generally, if you look at the chart, you will see that we are still in a bullish market. And that little candle gives us insight that the sellers, that is the bear, are exhausted. And you can see the bull has started coming into the market. And that is why we see that volume in the transaction in Cornerstone and Access Bank. Let's move to the next slide. So we'll still giving insights of our investors to take position in Presco right issue. So far, they have 1 billion outstanding shares. And what they are going for is additional 170 million, which is less than 20% of their initial share outstanding. And if we add that to the current outstanding shares, we'll be having 1.17 billion shares, which we also dilute the earnings per share, but it is still a good and a juicy offer compared to the price. The price is 1,450 and the right is actually 1,420. So you are getting a 2.11% upfront if you are taking position, if you are taking your right in Presco. Next slide. So far, we have our investors' delight for the week. For those of us who have fresh deposit and who have taken position or have sold stocks that are in profit and we have cash to deploy, these are some of the current hot buy lists from our analysts, which is we have the banking sector, we are recommending Access, ETI, Zenith for the current price, and also we are recommending for the insurance, we are recommending Conhor and Mazard with Name Insurance. And for the industrial, we are still recommending Badger Paint and also Vita Foam. For the cement manufacturing industry, also we are recommending Dangote Cement, and we are also recommending WAPCO. And if you look at the consumer goods so far, we are also recommending Oniflow. And let's not forget, Oniflow partner with Dangote Refinery to provide equipment. This also can serve as a good catalyst. And we also have the Nigerian Brewery. And for the agricultural sector, we are recommending Presco. And those of us that are Presco, it is a good time to actually pick up our rights because the right will be closing by Friday. So we have in the healthcare sector, we have Mibeka, and in the aviation industry, we are actually recommending SACO. And while in the oil and gas, we are looking at Arade, and we are also looking at Etana. So we'll come to the telecom, we're recommending MTN, and also we are recommending in Transcorp for the conglomerate, and for construction and real estate, we are recommending Julius Badger. And while for others, we are recommending UCAP. So for the list, we have from 1 to 29 as our buy recommendation, and while we have the ones in blue for our hold and while the red for sell. So we can take advantage of these carefully researched equity. That is Access Bank, First Bank, Fidelity, Jitco, UCAP, Wema, Zenith, Name, Mazard, Conhor, Badger Paint, Vitafoam, Dangote Cement, WAPCO, Oniflow. And why, if you take it down to 30 to 33, QTs, Okumo Oye, and Stanbic and UACN, our recommendation is hold. Why for Conhor, for Corn Oil and Dangote Sugar with Geregu and Transcorp, we are recommending a sell. So our market expectation for the week. So last week, the Nigerian stock market ended in negative territory for the 5th consecutive week, and the bearish sentiment, like the previous week, appeared to have followed the traditional pattern associated with the year institutional investors. And also, while the monetary policy left the MPR unchanged at 27%, it delivered a surprise tweak to a asymmetric corridor, reducing it to plus 50 / negative 450 basis points from positive 250 to 250 basis points also, while market analysts believe the move signals a subtle pivot towards easing and igniting a wave of repricing across FIGs. However, investor sentiment is expected to be slightly bullish this week, as I've shown in the chart, as depicted by the fairly strong market breadth experience for most of the trading days last week. So given the current situation, we expect a slight uptick in the market this week as investors take advantage of attractive entry prices presented by 5 weeks of bearish sentiment in fundamentally strong stocks. So we also expect that the NGX All-Share Index will close slightly higher, hovering around 143,500 basis points to 144,500 basis points. And also, we expect the bulls will dominate most of the trading days, and also market may likely close slightly on a green zone.
Okay, thank you very much, Pastor Mtula. Right now, we're going to our question and answer segment. You can indicate by typing your questions on the chat box or a raise of hands on same. Your question and answers, comments, please. Good morning. Please, which sectors can someone invest in now and 2026? That's an anonymous attendee.
Okay, good morning. If you look at our good morning, valued clients, if you look at our recommendation, it's actually cut across various sectors. But for now, telecom is also a good sector you need to consider. because if you look at the GDP growth rate for the Q2 of 2025, I think it's almost 4.25 in all the sectors under the growth rate. We could see that telecom recorded over 7%. And then when you see a sector that is outgrowing faster than the GDP growth rate, that gives an opportunity that is an industry or a sector you also need to consider. So the current market price of MTN presents good opportunity. That's number one. Secondly, you also need to consider the agricultural sector because we've seen the decision of the MPC. They are trying to moderate the interest rate, where consumer, agriculture, and then industrial and the cement manufacturing, they are likely to see reduction in their finance costs, and that will also improve on their balance sheet and the income and their earnings going forward. So these are the sectors you also need to consider to invest now, because later you are likely to see uptick in the prices of some of those tickers under those sectors. So consider telecom, agriculture, industrial, and then cement manufacturing. Thank you.
Yeah, another question is asking, is the banking sector still looking attractive for investors?
Yes, it's also looking very attractive. If you look at one of the slides being displayed at where they were presenting, we could see that it's over 80% dominated the total volume and value in terms of activities in the market, telling us that value clients are still investing in the banking stock and insurance companies. So there is room for growth in banking and insurance. We also consider the rate at which the banks are also investing in the fintech. We have also seen the number of the BBNs from the banks are also growing from time to time. We have over 120 BBNs in Nigeria. Data from the Nigerian Interbank Settlement Scheme. So indication is a strong indications that banking business will still continue to enjoy patronage. So and the current market price of some of the seekers under the banking stock, they are also trading below the intrinsic value, telling us that it presents good enterprise for those who also want to invest. So take advantage of the current market price of those seekers in the banking industry we have actually put forward. The likes of Access, GTB, Zenith, ETI, Express Bank, and others.
Okay, Mr. Oluyinka is asking, is the current bear market being caused by the CDT law coming up in January 26th or profit taking?
Yes, market reacted to the CGT announcement by the Federal Ministry of Finance. However, sometimes market also need to witness correction. And when that happens, it's an opportunity for people to take advantage, especially when tickers or market get to the oversold region. So, but we've seen publication from the Federal Ministry of Finance, especially from the Coordinating Center of the Economy. They are going to look into it. And the market stakeholders, NGS, SEC, and other stakeholders, they are also engaging the Minister of Finance and the Minister of Finance to ensure that they review. So from information we have gotten, there is tendency for them to also review this capital gain tax. So below what they actually put forward. So we are also encouraging you to take advantage of that, because once that thing is established, you are likely to see value clients also coming to the market to come and buy. So take advantage of the government market price, especially the BS market, which is the best time to grow your portfolio and also diversify your investments. Thank you.
Okay, another question is saying the year is gone as it were. Any scoop from Airtel with regards to their IPO?
No information yet. So as soon as I think they are still, they haven't actually given us insight information as regards when they are coming out with the IPO. But as soon as we get information from the company, we are likely to engage all our value customers, just as we did for Presco and we did for the banks when they started their revitalization. So for now, no information. That's why the stock has been on the strong bid in the last 4 months. So it's also part of our buy recommendation, just that it's not available in the market. But once that information reaches the market, we definitely communicate to all our value clients and all the lead investors.
Okay, good morning. My name is Kenneth. On your recommended stock this week, can you do some breakdown like short, mid, and long term? Short, mid, and long term.
Okay, in terms of a medium long term, for the short term, we're always very careful advising people for the short term. Any investor that is looking at investing for the short term, we advise you to take advantage of our fixed income products, our money market instruments. Capital market is actually meant for the long term. However, opportunity also presents sometimes when you take advantage of the lower price For example, look at Ikeja Hotel. In the last 4-5 months now, Ikeja Hotel has been the lead capital recommendation. We've been placing it on buy at 20 naira, and the sticker closed starting at 25 kobo. So for those who are taking advantage of the recommendation in the last 4 months, they can actually cash out on Friday and getting almost 50% return. So when you say lead capital putting some recommendations forward with a strong upside potential, we encourage you to take advantage of that, because over time, market is likely to reprice that asset, and then at that time, you can take advantage of the short-term opportunity. But we don't usually categorize any stock for short-term. Capital market is actually for the long term. Why? In the course of the long term, short-term opportunity can also present itself.
Okay. Mr. Oluyinka is asking, the market price of UBA and Access are lower than the former price. And this pricing feasible?
Just come again, please.
The market price of UBA and Access are lower than the offer price they are. Is this feasible?
In terms of the UBA, I think the person actually asked questions referring to the UBA right. I think the UBA right was 15 naira. I'm not sure that offer was actually successful, because even if you look at the lead capital, we didn't actually encourage people to buy to buy the rights or the public offering when the price is trading lower in the market. So it's not visible. We work on valuation. If you look at our recommendation for this, the banking stock, UBA was also part of the stock we also recommended. So I'm not sure. We haven't actually gotten information from the issuer whether that right issue was successful or not. But we didn't actually encourage people to buy the right or public offering when it's trading at a discount in the market. We also encourage people to take advantage of the market price so that they can have more holdings in their portfolio. So for the Access Bank, they did their own last year. I think it was around 19 naira thereabout. Access Bank is still part of lead capital top recommendation because we have looked at the earnings per share and the P ratio of the bank in the banking industry. They are still one of the best in the industry. When you look at the industry average for the earnings per share, and price the book ratio, and then dividend yields. Thank you.
Okay. Question, answers? Comments, please. Mr. Felix, you've been unmuted, please. Mr. Patai. Mr. Patai, please go ahead. You've been unmuted. Mr. Patai, you've been unmuted. Please go ahead with your question or comment. Okay, thank you once again for joining us for this breakfast session. We appreciate you. We are not taking your audience for granted. We want to wish you a Merry Christmas and a Happy New Year in advance. We'll see you again this time, same place next week. Thank you very much.